The Chinese economy has faced significant challenges, but it hasn't collapsed due to several key factors. Government intervention. The Chinese government has a strong ability to intervene in the economy. This includes measures like providing financial support to struggling sectors, implementing monetary policies to stabilize the economy, and controlling the currency. Economic diversification. China has diversified its economy beyond just manufacturing. It has significant investments in technology, services, and green energy, which help buffer against downturns in any single sector. Global trade. Despite tensions with some countries, China remains a major player in global trade. Its role as a manufacturing hub ensures a steady flow of income from exports. Domestic consumption. There has been a shift towards boosting domestic consumption. Policies aimed at increasing consumer spending have helped sustain economic growth. Resilience and adaptation. The Chinese economy has shown resilience and an ability to adapt to new challenges. For example, after the COVID-19 pandemic, China managed to bounce back relatively quickly compared to many other economies. While there are ongoing issues like the real estate crisis and mounting debt, these factors have helped prevent a complete economic collapse. Fong Lian's metaphor of two life-saving soups is quite intriguing. While I don't have the exact details of Fong Lian's statement, it seems to suggest that there are two critical factors or strategies that are currently sustaining the Chinese economy. Based on common analyses, these soups could likely refer to government policies and interventions. The Chinese government has been proactive in implementing policies to stabilize the economy. This includes monetary policies, fiscal stimulus, and regulatory measures to support key industries and manage economic risks. Economic diversification and innovation. China has been investing heavily in diversifying its economy and fostering innovation. This includes advancements in technology, renewable energy, and the service sector, which help mitigate the risks associated with over-reliance on traditional manufacturing and exports. As for how long the Chinese economy can last, it largely depends on how effectively these strategies are implemented and adapted to future challenges. The economy's resilience will also be influenced by global economic conditions, domestic consumption trends, and the ability to manage debt and real estate issues. China's economy faces several significant risks that could impact its stability and growth. Real estate crisis. The real estate sector, which accounts for a substantial portion of China's GDP, is experiencing severe issues. Major property developers like Evergrande and Country Garden are struggling with massive debts, leading to fears of a broader financial crisis. High debt levels. Both corporate and local government debt levels are high. Managing this debt sustainably is crucial to avoid financial instability. Demographic challenges. China is facing a demographic crisis with an aging population and a declining birth rate. This could lead to a shrinking workforce and increased pressure on social services. Youth unemployment. High youth unemployment rates are a growing concern. This not only affects economic growth, but could also lead to social unrest. Geopolitical tensions. Ongoing trade tensions with major economies like the US, as well as geopolitical conflicts, can disrupt trade and investment flows. Slowdown in global demand. Weaker global demand for Chinese exports, partly due to rising geopolitical tensions and economic slowdowns in other countries, is affecting China's export-driven growth model. Currency fluctuations. The yuan's depreciation against the US dollar can spook investors and make it difficult for the central bank to manage the economy effectively. These risks require careful management and strategic policy interventions to ensure long-term economic stability.